Welcome to this exclusive, unparalleled investment opportunity, shared only with a few select investors. From everyone here at Terra Equity Group and ERBE Wealth, we want to thank you for your time and interest in partnering with us. To skip ahead of the line at any point for a personal overview, simply connect with our team using the information shown here. Before we begin, it is important to note that the information shown here involves investment opportunities which are regulated by and in compliance with certain SEC rules and guidelines. The information we are sharing is based on a number of assumptions and hypothetical scenarios, and past performance does not guarantee future results. Like any investment, there are risks involved, and it is important that you are aware of those risks. In this video, we will review our Terra Lake Heights investment opportunity in Tallahassee, Florida. This opportunity is an investment in the booming and profitable region of Tallahassee, Florida. Acquisition of Terra Lake Heights, formerly Lakeshore Heights, is marked at $18.525 million and offers a 65-35 share split for equity partners. The total raise is set at $7.5 million with a minimum investment of $100,000 and a hold time of 3 to 5 years. With 160 recently renovated mixed configuration 1- and 2-bedroom units, along with family-friendly and home office-friendly 4-bedroom units, a rare find in rental apartment communities, Terra Lake Heights is the perfect home for what is already a growing population of renters in the surrounding area, those looking for more room for expanding families, or for a better work-from-home office solution without the expenses of owning or even renting a home. Tallahassee is attracting significant investment interest, and you are now seated in the best position at the best time to enter into this booming market. Our team, with over 50 years of combined real estate development and marketing experience, sees an opportunity to improve upon the investment potential through value-add improvements and continued vacancy reduction. The total acquisition cost for the property is $23.32 million with a minimum investment of $100,000. Based on conservative projections, we expect 24% annualized returns over the 3 to 5 year investment term, with a preferred return of 7%, which we distribute monthly instead of annually at the end of the second quarter after our team closes on the property. Terra Lake Heights is a recent build constructed in 2000 and offers 160 units totaling over 130,000 square feet of investment property. These units were extensively renovated in 2019, providing the area with rare 4-bedroom apartment configurations that make the complex even more desirable within an already desirable region. Tenants are responsible for their electric and for their residential utility bill, and the property offers residents bountiful grounds and plenty of parking for improved quality of life. We have already begun execution on the business plan and are continuing to lease the property out above 80 to 90% occupancy. As part of Phase 1, we are launching our marketing campaign. We'll be installing large signage and initiating the property's online media presence. Establishing investment stability from the start is key to building trust with our partners. Over the decades, we've maintained that identifying and targeting ideal tenants with lifestyle goals that better match those of our properties helps assure consistent occupancy and stability of our managed properties. We seek to improve the quality of life for our residents, and will continue finishing renovations that started in 2019. Exterior renovations will include a fresh coat of paint, revitalized parking, updated lighting, a new perimeter fence, improvement on the laundry room and other shared community spaces, such as the clubhouse, pool deck, and barbecue. Some interior renovations will also be completed to help complement and justify the increase in rents, but also to attract more ideally matched legacy tenants. Unit upgrades and improvements include new flooring, as well as kitchen and bath enhancements such as lighting and plumbing, which have proved effective in other properties our team has managed. Tallahassee has proven to be a powerful return on investment time and again. An established student population has assured the region's seemingly pandemic-proof booming economy. in turn driving employment opportunities, area development, as well as a unique cultural identity. Upon this legacy, Tallahassee has seen continued year-over-year growth across various sectors, introducing a new, wider tenant pool, standards of living, increased rents, and circular economic development. The region has been a successful investment for us for a long while, and we're excited about its continued growth opportunity. Tallahassee is an undiscovered gem, culturally and investment-wise. Historically viewed as more of a student-driven economy, Tallahassee has, over the decades, blossomed to become a powerful contender for investment attention, those seeking untapped financial opportunity in a much sought-after location. The city enjoys a stable student population which helps maintain impressive statistics, like a zero net population loss in 2020, despite the pandemic driving urban exits across the nation. This alone, a metric that few places outside of New York City can boast. And from a national perspective, where roughly 50% of the U.S. population equally rents or owns, Tallahassee drives a booming population of renters at nearly 54%, along with the tolerance for an increase of 18% in rents throughout the region over the last year, a strong employer base, and a healthy regional economy to help fuel its growth. The area is attracting significant interest among investors and employers alike. Here, our team sees positive trends across several key metrics we monitor, from a growing larger population that has seen consistent year-over-year growth of 9 to 10%, to cornerstone employers and technology startups which have helped deliver strong job growth in the area. So strong, in fact, that it is expected to deliver as much as 40% growth over the next 10 years. Tallahassee has been a great community for us, and our partners have enjoyed a number of successful investments in the area. Here, looking at Oak Park Apartments, we were able to improve the property value and increase rents from $500 to $900, which has generated nearly $2.5 million in value over the last year. Similarly, with our Dior Apartments, we were able to increase rents from $750 to $1,200, a return of over 25% and $3 million in value for our investors, all while improving the development in the community and the quality of life for our residents. As you can see, Tallahassee has a lot to offer, and our team has become very familiar with the needs and wants of the community as it has grown. A key differentiator in your potential partnership with Terra Equity Group is that we build monthly distributions into our business plans, something just not seen in the industry. We also produce a 7% return, whereas other investment teams don't often offer more than 6%. Simply put, with Terra Equity Group, you're getting high-quality opportunity and the top-tier team to manage it. To help protect our partners and their investments, our team makes conservative estimates based on decades of experience and continuous on-the-ground analysis. With this in mind, we expect a 7% preferred return based on a 3% annualized increase and a 2% increase in expenses going forward. And beyond year one, we see up to an 8.2% return for our investors. Generally speaking, we create value for our investors in 3 ways. First is the preferred cash returns. Second is the total value that comes from the appreciation of the property, which in this case is 17%, separate from the 7% that our investors will receive. And third, for certain investors, we are able to cost segregate. This requires more discussion, but there are opportunities to pass on the depreciation of the property to our investors, depending, of course, on investor activity. As discussed earlier, our team works hard to build trust with new and legacy investment partners alike. We do this through thorough, on-the-ground data collection, conservative estimates, and transparent planning. Even at a 5-year conservative cap, we anticipate that we will see an attractive close with this property. To put this in perspective, if you were to invest $100,000, you would see over $7,000 each year culminating 1 through 5, and $185,000 back at year 5 for a total return of $223,000. Not a bad way to put $100,000 to work. Here we see Terra Equity Group's sensitivity analysis built around an estimated 4.7 cap rate. The important thing we want to highlight here is again our conservative approach to the underwriting process. In short, you can expect our team to underpromise and overdeliver in our numbers. Our team invests in multifamily and commercial real estate with a focus on home building for our tenants and portfolio reliability for our investment partners. To reach this ideal balance, we hone in on long-term value creation and capital preservation. We target the intersection of three main drivers. First, we make sure that we have happy investors and work tirelessly to yield ever higher returns. Second, we make sure that we have happy tenants and build in value adds that continue to create a better life for them. And third, we make sure that the brokers and owners we work with continue to see value in their relationship with us and work hard to nurture long-term relationships with brokers and owners across the U.S., further assuring that Terra Equity Group is the first in line for access to new off-market multifamily asset opportunities. We have a strong track record of building equity and trust. This, and decades of experience in commercial real estate syndication, has led to investment in multiple asset classes of commercial real estate, with most of our focus on the more resilient multifamily class. To date, this has culminated in more than 2,300 units, nearing 3,000 units at the time this presentation is being created, with almost $183 million in assets under management across 7 states. The cornerstone value of the Terra Equity Group team is family. Across the board, this is a family-centered business. Our partners are all close-knit family members, and we treat our investors, our tenants, broker and owner friends in similar fashion. This means that our partnerships have a high degree of trust and reliability. We maintain upfront communications all the way through our projects. In fact, open communication is built into every aspect of our business. Our investors have our mobile numbers in their pockets 24/7. And just as you might call your family to alleviate anxiety or share in joy, that's how our family communicates as well. We talk to our investors when they're hitting family milestones, and this level of direct communication and access is how we hold our family together to the win. Oftentimes, we attract investors that are looking to provide qualitative impact with their capital. For them, our work in creating more sustainable, energy-efficient environments and initiatives that make tenants' lives both healthier and happier becomes yet another factor in our ongoing partnership across investments. And this is key to our business model, which is centered around legacy relationship building. It's not about one-off transactions or a one-off deal. It's not about a single property investment or return. It's about how we can create an ongoing relationship with our investors, brokers, and tenants alike. It's about bringing them into our family. Of course, we are passionate about capital preservation, but this is multiplied when built upon a foundation of trust and reliability. This investment opportunity is proudly presented by the teams at Terra Equity Group and ERBE Wealth, with over 50 years of combined real estate development and marketing experience, thousands of units, and hundreds of millions in assets under management. Vino Culeri is the founder and principal of Terra Equity Group and brings 20-plus years of experience and expertise across a variety of areas, from capital raise and formation to small business development and operations analysis. Stephanie Walter, owner and founder of ERBE Wealth, continues to be a valued partner of ours and has helped bring to life retail and multifamily investment offerings since 2004 and syndication opportunities since 2018. Together, our two teams have forged a legacy of experience in commercial real estate syndication and a strong track record of building equity and trust, the bedrock of our partnerships. Over the decades, trust, experience, insights, and action have led our teams to oversee successful investments across multiple asset classes. Our many recent wins showcase how a partnership with Terra Equity Group means working with a dedicated team that is committed to exceeding our target numbers, and we have a solid track record of improving communities while growing investment capital. Seen here are just a few of our many investment successes, including Terra Palm Air in Fort Lauderdale, Florida, a project that is on track to deliver a 29.6% annualized return. Again, it's important to keep in mind that we distribute the 7% preferred returns monthly, an uncommon return in the investment community, but one we proudly offer our valued partners. These partners continue to enjoy significant returns from opportunities unearthed by our team, as we consistently deliver well above our conservative projections. Now we'd like to review some of the questions our team at Terra Equity Group has come across with our investors over the years. Questions like, "When do you need my money?" Coming across this inquiry or others like it, we like to remind our investors that our opportunities are uniquely time-sensitive. Because of the nature of our broker relationships, we are often able to get pre-market opportunities that have a short window of syndication before they become available. For this reason, these opportunities are available to our investors on a first-come, first-served basis. We encourage potential investors to contact us as soon as you're ready so that we can first, qualify you as an accredited investor. Second, assure that an investment opportunity is still available. And third, get all the paperwork and soft commits in place so that we can get the investment moving. Additionally, our team doesn't want to be holding investor money while the paperwork is still underway. We want to close the raise as quickly as possible so that we can begin the work of stabilizing the property and getting the monthly distributions out. We don't want a scenario where we are sitting on investors' money, waiting for a deal to close, and then we hit the stabilization period, because at that point, it's simply wasted capital. How many other investors are in the deal with me? Every real estate syndication is different, so depending on that particular opportunity, there may be differing amounts of investors in the deal together. We only know how many investors will be in on an opportunity once we close the actual corporate structure. We are sometimes asked how much investors are going to be involved in day-to-day management, and the answer is not really that involved at all. We partner with very experienced property management firms that dedicate their time to handling all day-to-day activities the property needs, and as an investor, you won't have any management responsibilities. Of course, we love your feedback on improving our properties and encourage investor ideas to come forward, but there are no expectations or need to be involved. How do I recoup my investment? Simply put, when the property is resold or refinanced at a higher value, that's when our investors recoup their initial capital. Until then, you get monthly distributions for preferred return. What am I actually buying with my investment? All syndications are centered around a specific property and therefore a specific opportunity. What we do is create a limited liability corporation for that property. That LLC is the actual owner of the building, and what you're buying is essentially shares or investment units for that LLC. Do you follow SEC rules? Yes. Because you're purchasing an investment property as a security, and because these qualify as a security regulated by the SEC, we strictly comply with all of the SEC's regulatory rules, and investors should see this as a small part of our core value set, taking comfort in knowing that we care over the longevity of their investments. Sometimes we'll hear the question, can anything go wrong? Absolutely. Tenants could have an issue where they can't support their rent anymore. We could have a weather event, political unrest, property management issues, and so on. All investments carry some risk, but it's how we actively work to communicate and mitigate as much of that risk as possible that determines the likelihood of success for our team. As part of our transparent investor policies, we outline all discovered and inherent risks before we proceed with an investor. We go out of our way, sometimes at a loss, to make sure that we are in front of our investors and always protecting their capital. Oftentimes, this is being forward about specific risks we're facing on any given project. But as we've mentioned, our conservative approach to underwriting properties always employs a contingency and a certain margin of error in case there are unintended events that come up. This helps drive one of the things that we are most proud of, our high rate of return and investor referability. Can you guarantee that I will receive my initial investment back? As an investment, there is no guarantee. All investments carry risk. However, we do our best to mitigate that risk by acquiring the right type of properties, executing the right type of strategy, remaining clear and transparent with these strategies, and being very conservative in our approach. What happens if the investment fails? If a property fails to meet the investment goals, you, as an equity investor holding Class A shares, would have limited liability. Your exposure is limited to the amount you contributed. What happens if I need to sell my shares? If you think you may need money for reasons before the investment, then we strongly suggest you do not invest. Your shares are restricted securities, which means that you cannot sell during the first year without an exemption. This is an SEC rule. The process is very cumbersome and is only possible after the first year. After the first year, you may be able to sell with an exemption, but the manager has the right of first refusal, so this is not a guarantee. In fact, in our 20 years, our team hasn't seen this happen except in one case where, due to COVID-19, an investor experienced a financial challenge, and in this case, we were able to find another investment to migrate their capital to. The most important metric to consider when investing is our track record. We have not had a single investor lose their money. This again demonstrates the reliability you can count on with Terra Equity Group as your investment partner. Before we close this presentation, it is once again important to note that the information being shared here involves investment opportunities, and that these opportunities are regulated by and in compliance with certain SEC rules and guidelines. It is suggested that you have a clear and present understanding of your financial portfolio before discussing with our team how we can assist you with your investment strategies, like the investment opportunity detailed here. This concludes our overview of the Terra Lake Heights investment and partnership opportunity. If you would like to reach out to our team to learn more about this and/or our other properties we're reviewing, or to set up a free advisory session to go over your financial goals, simply call us at 954-987-6879 or email us at info@terraequitygroup.com. You can also visit our website at any time by heading to www.terraequitygroup.com. Again, our teams at Terra Equity Group and ERBE Wealth would like to thank you for your time, and we look forward to discussing this opportunity with you in more detail.